Moving on to the second segment, namely Silvercorp's 28% equity stake in New Pacific Metals. The stake is currently worth more than $100 million US, but I believe that in time, the true value that Silvercorp will be able to unlock through this investment will be a lot greater than the current equity value. What we will focus on in this segment is understanding Silvercorp's strategic thinking around this equity investment. But before this, we will let President of New Pacific Metals, Mr. Andrew Williams, explain New Pacific in greater detail.
Andrew Williams, New Pacific Metals. I'm the president of the company. I joined 2 months ago. Previous to New Pacific Metals, I spent 11 years on the buy side at an institutional precious metals investment firm, most recently as a precious metals analyst. And I made the jump in industry because of this fantastic opportunity at New Pacific, a company that's discovering and developing world-class silver and gold deposits in Bolivia. And on this introductory slide is a nice photo of our flagship silver sand project. It's the one that brought us to Bolivia in 2017 and has emerged into one of the most significant global primary silver discoveries of this past decade. So why New Pacific? We've got 3 projects, all in Bolivia. The most advanced is the Silver Sand project on the left side of the screen, which is a large silver deposit that can be mined by open pit mining methods and processed using tank leaching. And early in January of this year, we released our preliminary economic assessment, highlighting a 4 million ton per year throughput rate, producing 171 million ounces of payable silver over a 14-year life, yielding an after-tax net present value of $726 million and a 39% IRR. This year, we're heavily engaged in permitting our silver sand project and hope to be bringing it one step closer to being ready to finance and build, which will be an exciting and monumental occasion for the company. And silver sand is a company-making project in and of itself, but if that wasn't a tough enough act to follow, in the second half of 2021, the company began drilling its second project, Carangas, located in the middle of this slide. And we drilled 150 holes so far at Carangas to the end of 2022 in 64,000 meters. And what we've discovered is a 1,000-meter long by 800-meter wide silver horizon, and overlying a broad gold zone beneath that. And that gold zone and the discovery there has really changed the game for us at Carangas. And so this year, our program is to drill 15,000 meters at Carangas with 5 rigs and then complete our inaugural mineral resource estimate by the middle of this year, and then follow that up with a preliminary economic assessment by the end of this year. So Carangas is exciting, it's big, and it's moving fast. And our third project, last but not least, on the right-hand side of this slide is Silver Strike, which we started drilling it last year with a modest scout program, and we discovered a 200-meter thick near-surface oxidized gold zone of 1 gram per ton during that drilling program, and consider Silver Strike to be prospective for both silver sand and Carangas styles of mineralization. So what are we up to this year? Well, at our silver sand project, our goal is to complete a pre-feasibility study by the middle of this year. As I mentioned, we released our preliminary economic assessment at the start of this year. So we're going to tighten up a number of those assumptions, and we're completing ongoing technical work to bring that up to the rigor required of a full pre-feasibility study by the middle of this year. And as I mentioned, we're also working to complete our environmental impact assessment study, which will be a major milestone for the Silver Sand project. And then the ultimate goal is to obtain the environmental impact statement. And then finally, we're working with Comabol, which is the state-owned mining company in Bolivia, to obtain the ratification and approval of an already signed mining production contract that will unlock an additional 55 square kilometers of exploration ground surrounding our silver sand tenements. And then at Carangas, as I mentioned, our goal this year is to complete a 15,000 meter drill program by the end of this quarter, which should be ending this week, to extend the deep gold mineralization to the northeast and continue stepping out on the shallow silver mineralization to the southwest of the area that we've drilled off. And then use that drilling. We'll have roughly 180 holes in roughly 80,000 meters of drilling to complete our inaugural resource estimate by the middle of this year, and then roll that into a preliminary economic assessment by year end. And so this time next year, the Carangas project will be at the same stage that Silver Sand is today. So we're rapidly advancing that project, and that's ultimately how we can create such great value for our shareholders in this business. Time is money. And lastly, at Silver Strike, given how much we've got on our plate at both Silver Sand and Carangas for a company of our size, we've decided to pause exploration activities this year so that we can really focus on delivering on our important objectives at both Silver Sand and Carangas. This by no means underscores the geological potential at Silver Strike. We made the strategic decision as a company that it's in our best interest to really do what we have in front of us right at Silver Sand and Carangas, and look for us to pick Silver Strike up again, back when our internal conditions warrant. So how have we been so successful operating in Bolivia? The first bullet point suggests that we can't take all the credit for it because the geology in this country is unbelievable. Bolivia is home to the 3 billion ounce Cerro Rico silver deposit, which is one that's been continuously operating since 1545. We're also on trend with Peru, Chile, and Argentina, which are 3 countries that host not only some of the world's great deposits, but some of the world's great mines. And we know that Mother Nature doesn't tend to respect man-made borders when depositing metals. A second point that is really important to understand about Bolivia is there's a deep mining culture in the country. Mining's responsible for 30% of the national economy. It's deeply ingrained in the country's DNA, harking back to 500 years, the Cerro Rico deposit, and right up to today, mining is an essential part of the national economy. And in 2021, Bolivia ranked as the 8th largest silver producer globally. And then the third bullet point is probably the one most important for us, is that the country has been greatly underexplored in the last 20 years. When we came into the country in 2017, there were really no other juniors operating in earnest in the country, and today there's half dozen to 10 different juniors that are operating in the country, largely in the wake of the success that we've had at Silver Sand and most recently at Carangas. And when we came in and made the Silver Sand discovery, we're really proud of using that discovery, which helped us to earn a reputation in the country as someone that's a reliable and trustworthy partner. And then we rolled that first mover advantage up and were able to acquire both Carangas and Silver Strike, and Carangas really being the latest project to bear significant fruit from those relationships and the in-country know-how that we've developed as a company. So zooming into our Silver Sand project, the Silver Sand is nested in a 3 square kilometer administrative mining contract, which grants us the right to mine. As I mentioned, though, we still need to obtain our environmental impact statement, which is something that we're working on in earnest this year. And we drilled 136,000 meters in Silver Sand, 550 holes in the 5-year span from 2017 to 2022. So we've drilled the heck out of this thing, and that database forms the basis on which we released not only our first resource estimate, but more importantly, that entire data set was used in our updated resource that we released in the fall of last year. And then that updated resource, which I'll show you on a subsequent slide, underpinned our preliminary economic assessment that we released on January 9th of this year. This 5250 cross-section gives you a nice overview of what we're dealing with geologically at Silver Sand. It's a broad disseminated fracture network. We're not chasing half-meter wide, high-grade, narrow nuggety veins as a broad disseminated bulk system that we've drilled extensively. There are areas of this deposit that we've drilled down to 5 by 5 meter spacing in order to really satisfy the most critical of QPs for our resource estimate. And another important point to note from this cross section is that the bulk of this mineralization comes right to surface. The green Tarapaya formation on the top right portion of the slide acts as an impermeable cap that stopped fluid flow from migrating from beneath, and effectively that contact then allowed the silver bearing mineralized fluids to pool in and around that contact and preserve such a wonderful deposit so close to surface. This next slide gives you a broad overview of our updated resource estimate as compared to our 2019 resource estimate. In bold in the middle of our screen, the 2022 estimate, 201.8 million ounces of silver in measured and indicated, which is an important point to emphasize that, as I mentioned, this preliminary economic assessment was based on the 2022 resource estimate, and over 90% of that PEA was based on measured and indicated, which in the junior mining space, one of the features of a PEA study is that you're allowed to use inferred mineralization, which often can form the bulk of most juniors' PEAs. But in our case, because we'd spent so much time and effort drilling the deposit, we had such a large measured and indicated resource inventory that almost all of our PEA study was based on measured and indicated resources. And the second point to highlight is that the grade. So 116 grams silver, as I mentioned, this is an open pittable deposit, which if we put that into gold equivalent terms, that's roughly 1.5 grams, which would make this one of the nicest open pits to come online for quite some time. And so this next slide gives you a nice overview of the technical parameters that were outlined in this study. So the first bullet point, or the first line item, is the strip ratio, 3.6 to 1. Which is including a 18.5 million ton pre-strip. So when we're actually in operations, that number is going to be closer to 3 to 1. And a 4 million ton per annum plant, that's 12,000 tons per day operating over 14 years. So that size of a plant is well within the scope of a company of our size and scale to design, finance, and build internally, which is really important. It's a nice bite-sized, high-grade, high-impact project for us. 107 grams per ton silver, as I mentioned, for open pit head grade. It's just an exceptionally high-grade project for us, and it makes intuitive sense when you go through the strip ratio, the grade, the recoveries, 91%, tank leach Merrill-Crowe, why this project delivers such robust economics. And we ran this study at $22.50 silver, which I think is it's in and around where the silver price is today. And the study yielded an after-tax net present value of $726 million US and a 39% after-tax IRR, which is well in excess of any reasonable hurdle rate that one would use to evaluate a construction decision on a project like this. A couple other points to highlight: mining cost, $9.55 per ton milled. We're going to go with a contractor mining operation, and as part of our pre-feasibility study, we're going to be obtaining specific quotes from potential mining contractors. So look for us to sharpen that number up in the pre-feasibility study. Processing costs, that includes tailings dewatering, and we'll get into our tailings disposal methodology on the next slide. But one thing to note is in Bolivia, the power costs, which is often the bulk of the processing costs in any operation, our power cost is US 5.5 cents per kilowatt hour, and that was a quotation from a local supplier. So another contributor to why our cost structure is so competitive at the operation. And sub $2 a ton G&A, which is a number that benchmarks well against comparable operations in the country, and that all contributes to an operating cash cost of roughly $8.50 an ounce and an all-in sustaining cost of just a little over $10 an ounce silver. So an incredibly cost competitive project at Silver Sand as outlined in our preliminary economic assessment. And The other point that we didn't touch on that last slide, which is a point that I'm particularly proud of as someone that's responsible for going out and coordinating project financing, is that in the given the strong production profile in the first 4 years, as we can see on this chart, 16 million ounces per year of silver, the after-tax payback period on this project is under 2 years. And that, to put this silver production profile into perspective, 16 million ounces per year is what silver industry giant Hecla is guiding this year in their silver guidance, from 16 to 17.5 million ounces from their 3 primary silver mines combined. So that these first 4 years are going to be substantial, and that's driven by just generally some higher grades that we're fortunate to be able to access in the heart of the deposit early on, and then we get into a bit of a stripping campaign in the middle section of the mine life, and then things pick up again in the back half. But this is exactly the kind of production profile where we can have rapid cash flow and payback in the early years of the mine life. That is a really special attribute of the Silver Sand project. So the CapEx, $308 million initially, life of mine, $327 million. For a company of our size and our market cap, which is in and around $350, $400 million US, this is an entirely financeable project for a company like us. The biggest piece in there is the processing plant, which is that 12,000 tons per day, processing plant, 4 million tons per annum. And then the next biggest component is the pre-strip. So that'll be contractor, 18.5 million tons times our roughly $2 and change. Material movement cost gives us the $47 million pre-strip. Because we're going with a contractor, we're not bearing the upfront capital cost associated with a fleet. So there are significant capital cost savings there by going with a contractor. The next biggest piece in the capital cost estimate is site infrastructure. And if we zoom into that, $47 million, the biggest chunk is we have to bring a power line to site, 20, 30 Ks, nothing extraordinary or significantly complex, but we have to bring it to site nonetheless. And there's also a water reservoir that we need to build to capture excess rainwater for use in our processing plant. There's also some interesting positive social benefits that come from that engineered solution. So that's a really elegant feature of this project, is that there really is, in the grand scheme of things, relatively minimal infrastructure required. Tailings facility is the 4th largest item on that list, $25 million. So we've gone with a dry stack tailings facility, which the downside is that you bear a significant upfront capital cost, but the upside is that from an ecological perspective, it's by far the most benign solution. It significantly cuts down on the project's water consumption. It also significantly reduces the footprint required from the site itself, because we dewater the tailings before we dispose of them, and so the volume is significantly less. And it also offers a much more robust and stable long-term storage solution from a geotechnical perspective. So it ticks all the boxes, and it made sense for us to go with the dry stack tailings for this site. And then the final piece is that because we spend the capital early and we're disposing this dry cake material in our waste facility, is that we don't have to incur the ongoing tailings dam lifts, which are often a significant component of sustaining capital in any modern open pit mining operation. So I mentioned that we got the power quote from a local supplier. And then there's also elements of the large elements of the processing plant, equipment, and tailings facility that we sourced quotes from global suppliers on. So again, these are numbers that we're continuing to hone on the pre-feasibility study, but nonetheless, we're very pleased with how they came out in this preliminary economic assessment.
Well, I've been an exploration geologist for more than 40 years, primarily focused on silver. And I have been fortunate to work with people in a team that we've been able to make a couple of major discoveries. Juanicipio being chief among them, and that was done for Mag Silver. And a gentleman named Gordon Neal was the corporate VP for Mag Silver, and then he became the president of an earlier version of New Pacific. And he brought me in fairly early to take a look at silver sand initially. I think this is 2017. And so I went and looked at the project, really liked what I saw, and he asked me to become an advisor. And then I was asked by Ri Feng, the founder of the company, last year to join the board, which I did in December. And I mean, I should say, my focus is on exploration. And so I look at all of these projects, and the projects and the companies I get involved with have to have big upside potential for me to be interested. You have to put silver sand into context. Silver sand sits in the Bolivian tin silver belt, which contains the second largest silver deposit on the planet, Cerro Rico de Bolivia, which is only 35 kilometers away from silver sand. And there's a belt of big deposits that silver sand is one of, and they are fairly grossly underexplored. They have a lot of upside potential, and silver sand looks like a very large system which is not completely understood. So it's in a great neighborhood. We would call it elephant country. And there's a great example of similar geology very nearby. So the potential for how big it could be is very, very high. I think if you put the pieces of what is known of silver sand together, the geology is telling us that there is much more to that system to be found. So all of that mineralization came from somewhere. There's a source. There's a feeder that brought where the fluids came from and brought them into the areas that have been known so far. I think that the potential for exploration back in the direction of those feeders is very, very high. They're probably lie to depth, which would mean underground mining as opposed to the open pit mining, which is what's envisioned for the resource as known at Silver Sand.
I mean, what's the strategy for you to unlock the value of your large equity stake in New Pacific going forward?
Well, I think the strategy here isn't necessarily focused on the immediate value unlocking, because if we think there's more value to be created in that investment. And so what's important here is to focus on the priorities, which is advancing and de-risking the projects and making sure that there's nothing that impedes New Pacific's ability to do that. Going forward, there's a number of different ways over the longer term that we could, monetize these investments, which could involve us acquiring the company or a project or projects, partnering up with another entity. New Pacific could, go the route of Silvercrest and basically bring this great silver asset into production on its own, and we could participate in the re-rate in the equity markets through that. Or if there's another strategic party that puts a higher value on the company or the assets, then we can determine, for our shareholders, we would, we'd be prepared to monetize our investment that way. So I think it's very open-ended, and at this point, it's just important for New Pacific to put its head down and focus on those near-term de-risking milestones.
Silver sand specifically, is the interesting piece here. It's a pure silver mine, which is that's one thing that's great. It's we're talking 10 to 15 million ounces of silver per year. So I mean, obviously, it from a size perspective, that would transform Silvercorp if it were to be operated by you guys in the future. And as we heard and saw, actually, Silver Sands is rapidly being advanced. So in the not too distant future, it would be ready to be, for a construction decision, essentially. So I'm just trying to understand that how you guys are taking that into your considerations. Obviously, you're looking to acquire something here with your large cash position, which we will get back to soon. But what's the actual strategic thinking here on Silver Sands?
Well, I think as I indicated, it's really focused on what are those elements that are needed to demonstrate value and de-risk the asset. Up until now, we had what would be a healthy market cap for an exploration asset. Now we have a development asset with a first look at economics and some milestones, in terms of de-risking on the community agreements and the permitting. So I think the question comes down to, what is the right timing and what is the right price to do something, and whether that's us, whether that's another party, or whether that's simply the fact that New Pacific can raise money on a reasonable cost of capital to move the project forward and realize those value increases in the share price.
So let's say we have a scenario in 18 months that Silver Sands is completely de-risked, and they turn to they start to actually look for a partner. Would you allow that process to drag on, or will you actually act if it looks like they're having difficulty to actually develop this project? Because you're a large shareholder of New Pacific, and if it just sits there and bleeds money, it will cripple their ability to advance Carangas and Silver Strike as well. So there's synergies to be had there as well for the focus of the story for both companies in a sense.
Yeah, and your one question had a number of kind of questions in it. So, we're not going to let it languish, but exactly what we do and how that's structured, for the benefit of Silvercorp shareholders will be, determined at the time. And similarly, from a corporate governance standpoint, New Pacific has an obligation to all of its shareholders, not just Silvercorp. So I think, again, it comes back to running things in an appropriate fashion, which is, again, New Pacific doing those de-risking activities, evaluating, investigating all of the alternatives that it can access to get access to capital, make those determinations, and Silvercorp will be making similar determinations on behalf of our shareholders.